Panda anthem.
Ian, what's up?
Red Panda anthem.
Red Panda, what's good?
Red Panda anthem.
It's your boy.
Going up.
And one of the things I talked about this weekend at the JP Morgan event is that how much of a blessing me getting started in 2008 recession was. And the reason why is I was able to make mistakes, see how quickly a stock could fall or rebound. And then also the number one rule, to always remember that a stock can, or commodity or crypto or future, could go negative or go to zero. So some of the stocks down from their all-time high, there's a magical list of them. Carvana, which they need to improve upon the delivery of the cars. The vending machine thing is innovative. To not get the car and not have the proper plates, but I'm sure they'll work that out. When capital is flowing, and this is why I always say, focus on the number one thing in your business. For me, the number one thing in my business is to get returns. Nothing else fucking matters. Put in chat, what's the number one thing for your business? When you buy the iPhone, 9 times out of 10, the iPhone is going to work and not be defective, right? So Nvidia, Facebook, Zillow, Square, Sprint, Snap, Etsy, Palantir, Netflix, PayPal, Neo, SoFi, Teladoc, Roblox, Roku, Unity, Fiverr, Robinhood, Coin, and as I've said it before, but as a class, brokerage firms usually are not good investments to hold for long periods of time because there is no substantial edge there. Rivian, we've talked about before, of course. DraftKings, right? So out of that list, go and look out of this one list and say, well, who are the 2 companies out of this that would be great for the next 10 years? Nvidia, more than likely, should be one of those. Should be one of those. Please be careful, be mindful. And the reason why some of you are taking these losses is because you're listening to too many sources of information who has no accountability to you if you do well or not. Only you and you alone care about your gains. And right now it's looking like pre-quantitative easing. So from 1996 to 2007, go study what happened. Tech stocks were flat. Inflation was higher. Gas was higher. Study 2000, 2002. And I told you guys in October a crash would come. NASDAQ is currently 27% off its all-time high. What area did I say 5 months ago is a good area to load up that is not the 50% area? Study those down years. And here's what to do. From every year from 1996 to 2007, I want you to go through literally day by day to see what the averages were on every fall and every drop. And that's how you get your targets. For those who do the work, you're going to get an edge in the market like no one else has ever seen. For those of you who don't, you're going to be at the mercy of the market. And I saw California Public Employees Retirement System added AMD and Square to their retirement plan. Quite interesting, right? I told some of you privately what I thought was going to happen with Square Saturday. I think that is going to pan out. AMD is a great addition. And also, when people start to go on an attack on crypto, AMD and NVIDIA will be a key component, no pun intended, to making that become a reality. And last year, this is why I tell you not to focus on thematic investing or rotation. I thought everybody gave a damn so much about ESG companies. And this year, oil is taking off like crazy. So Conoco, Marathon, Antero, BP, Phillips, Chevron are hedges. So when I said it before, if oil doubles in 1 year, it's usually a sign that a recession is going to come. So when oil went negative, would have been hard to time it. But if you got in and you've been holding since then, you could see the disparity in the market. That's why when people are telling you, well, gold is a hedge and the dollar is a hedge against inflation, those things, those axioms are not always true. There's two sets of information. The information that people give you to kind of just pat you on the butt and send you along, and then the real information. No one really said, hey, invest in oil to offset this. And then when the market is normal again, because you have to remember that the energy sector was the tech sector before technology became a big thing. And yes, this crypto crash is very reminiscent of the 2000 crash, and Bank of America said the same thing. But for those of you who believe in crypto, if Bitcoin gets to that $20,000 level or below, load up and hold for a 10-year period. There's no asset that's given better returns over a 5 or 10-year period. Stay focused, stay locked in on your craft. Don't deviate. I know some of you want more gems and more insights and more books and more podcasts and more PDFs. And I want to do all this homework that doesn't matter. None of that shit puts money in your pocket, man. Doesn't give you freedom, right? I want you to stop being information addicts. I want you to execute and get paid incredibly well. I'm going to go through a couple stocks and we'll wrap here. But now the era that we're going to be in with angel investing, venture capital, public markets, and small businesses is going to come back to old rules. The companies with the best business model that is able to get the best human capital in their business for the lowest fee with the highest profit margin and loyal customer bases will win. You have to go find those. That is your job. Go hunt internationally for the companies with the best business model, high profit margins, loyal customer bases with an edge that cannot be replicated or stolen. And those are the companies that are going to dominate. And Saudi Aramco is taking over Apple as the number one company in the world. A lot of times when we're looking at, you can go to visual capitalists, but a lot of times when people are talking about the top companies in the world, those are not mentioned. That's why I kept saying go study internationally. That'll give you the edge that you need. And the thing that I do in private at these events is the thing that I want to do with you here tonight and tell you, you deserve to be happy, you deserve to be wealthy, and you deserve to be free. And sometimes we don't take the actions that we feel that we should simply because we do not feel that we're worthy of the money or don't want the responsibility that comes with it. But what's the alternative? To not earn, to not take care of yourself, to not take care of your family. This is why it's important. While the market is in turmoil, I can be a voice of serenity and compassion for you. In very few industries does exciting things make the most money. I was talking to Ty about this earlier. There are some businesses that are so boring on the outside, but they are recession proof across the board. And even in recessions, they do even better. Your job is to go find those, whether you know it or not, whether you work for someone or you have your own company. You are an individual business and your competition is every other business on earth, which is every other human, hedge fund, venture capitalist, angel investor, broker dealer. The entire world is hunting for alpha, for return, for gains. And then as you climb this magical mountain of money, you then still have to find a way to have peace, health, happiness, joy, great friends, great family, be a good steward in the community, good reputation, reliable and honest person, and then you die. Focus on the thing that matters. Investing is easy. It's not hard. Invest in the top 2 companies that dominate a decade or a generation. Invest in index funds, pair them together. But because you may not have wanted to put the time in to learning how to take 12 or 10 great futures trades in a year, you chase something where the gain wasn't there, or you chase a SPAC. And for my traders, because you think that you'll be able to outperform the market day in, day out without great habits and great systems in place, you don't invest long term. Please write this down. Your job is to have 28 oceans of revenue in your possession. And I know when some of you first heard it, you hated it. But how much smoother would life be for all those that you love if you had those 28 and you were able to help? That is the name of the game. And I don't think you should short things for a long period of time, but for a long time, UVXY is something we talked about in Stock Club as a hedge. SARKK is one for ARK. And I'll stop there. I'll wait till next week to give you another one. Even with the inverse ETFs, I've said it, I only want you to hold it for 3 to 5 days, because when your fortune stops in those, it's game over. And I know it can be fun to get 14%, 20%, 50% in a day. But what makes all those gains go away is if we don't focus and lock in on the plan. I want to say it again. UVXY, any inverse ETF that goes up as the market falls, I only want you to hold for 3 or 5 days. Please put 3 or 5 days. Zoom right now is not attractive. Peloton is not attractive, even though I like some of the managerial changes that they've made. If you're doing options, 4 trades, and even with that, options, and I've learned this too, not to attack any asset class. For all my financial content creators, take it from me, the biggest mistake you can make is attack an asset class, because the army that believes in it is going to attack you. The real secret is to use every asset in your possession and put them on a ranking system. Long-term investing is always going to come first. Trading is going to be at the bottom third of that poll. Now it's up to you to go do. 2 tech, 2 index, no stress, Apple and Microsoft. And let's say you're watching this 10 years from now, whatever the top 2 companies are that have a stranglehold on consumer and enterprise with the highest market cap and highest amount of revenue, that is who you invest in. You hold for a long period of time. In closing, if you can do everything over from your investing journey in terms of long-term investing, what are the 2 things that you would do better? Whatever those 2 are, those are the 2 that you do now. Recessions are not bad. If you're not homeless, destitute, your power's not out, you're fine. You're going to have to suffer for maybe maximum of 3 years, more than likely. When the chip shortage starts to lighten up a little bit, March, April of next year, we'll be fine. And you'll say, phew, made out of recession, and you'll be happy that you invested. Stay focused. You don't need more information. You just simply need to execute upon the information, assets, and strategies that you have now. Love you all. Thank you guys for tuning into Market Mondays. Please go watch every other episode that we've done if you truly want an edge in the market. And if I've made you money, please put yes in chat. My name's Ian Dunlap. Some people call me the Master Investor. More importantly, I'm Xander's dad. Love y'all. Over and out. Peace.
This that Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Rap Panda,
This
what's
that
good?
Red Panda Anthem.
Your boy.